Welcome everyone, Stock Market Technical Analysis. So I'm going to get right into the charts. We'll start out with general market analysis and then look at some individual stocks and trade ideas. I want to look at the gold mining stocks because I think there's a trade setup on a lot of these to the long side. So we'll give an update on that and then we'll go ahead and wrap up. If you guys are new, check out the course. I have a it's really a technical analysis course. It's really based on how to read the charts and how to look for trade ideas, trade setups based on what the technicals tell. So that's link is in the description below. And then leave me a thumbs up, guys, if you find some value in the content. Even if you go against my trading style, maybe I have a lot of people who like to troll me when markets are moving higher and I think they're going to go lower. And they basically just say do the opposite. Well, that's fine, but I think there's something to gain out of the technical analysis, whether you you don't have to believe in the trade ideas that I put out there. Each person needs to take their own trades, but I think there's still some value around the analysis. So again, leave me a thumbs up if you guys find some value. Okay, we'll start out with the broad markets. We're going to look at the S&P 500. We have a potential bearish rising wedge here on the hourly chart, but really I was just kind of marking it out. Really what I see is this is the trend line that we've been walking up on the hourly. So an impulsive breakdown from that would be your sell signal. Until then, we're just continuing to grind higher. On the daily, you can see we're basically just grinding higher below this trend from the March 2020 lows. So you can see we held support, held support, held support, held support through here on this daily chart. Finally broke, and then we've just been back testing on a really slow grind with quite a bit of price compression. So each day is just very narrow trading ranges, and it just kind of moving higher, mostly in the overnight session. They're just kind of gapping it slightly higher and then just grinding around all day. They move it higher, it grinds around all day. And that's really what's going on in the last week, week and a half. So all my videos for the last week and a half have been talking about this, and it just continues. But nothing's changed technically. We are, coming close to a back test of that broken trend where we should run into some resistance. Really up in this area. And we also have big negative divergence. So right there, see how we're making a new high in price, but we're making that on lower momentum. And so each one of these negative divergences in the past has been followed by, about a 10% correction or so. So I think that's likely what we're going to get sometime soon once we get a sell signal. And that would come in the form of an impulsive breakdown candle. I think when it shows up, we're likely going to wipe out all the gains for the last week and a half. I think we'll get a pretty impulsive break like that, and we'll wipe out all these gains in one day. So we're just waiting for that. Moving on to the triple Qs, same deal. Triple Qs on the hourly chart right here. You can see we've just been creating this bearish rising wedge. Let me go ahead and get rid of this circle here. We've just been grinding higher in the bearish rising wedge. We're actually at the apex of the wedge just about. We can grind around probably for the remainder of the day. And then I think there's some jobs data that comes out tomorrow. So maybe that's what the market's going to use as an excuse to break down. Again, on the daily, coming off your March 2020 lows, you have an uptrend, held support, held support right through here, and then finally broke, and we've just been back testing on this slow grind higher over the it's definitely upward trend in the short term, but it's below the major trend and it's in a bearish rising wedge pattern. So that tells me we're going to get a breakdown candle, something like that. All right, and probably I think, we can grind higher and continue to grind, but I think we're going to do something like that. And it's not going to happen all at once. We're not going to move just straight down. It'll come in waves, but I think we're likely going to reverse trend once we get that sell signal. What am I looking for? Well, on the hourly chart, you can see here, clear uptrend. We've held this trend line down here for a while, couple, 4 reactions. So an impulsive break of that would be the next sell signal. Just waiting for that. And until that shows up, more of the same. Okay, I want to look at some of these gold miners and just go through some of these. I take some extra time on these. So here's gold bullion. This is just the price of gold bullion as it trades out, sitting at 1773 today. The major trend line, bull market trend line, in fact, gold is in a bull market, is right down here. You can see we really established the trend line, held support on the COVID drop. had another test of support and held another test of support. And right down here, as you zoom in, we're basically right there. We had a tag of that trend line 2 days ago, actually yesterday as well. So far we've held, moving higher, a little bit higher today. It's still struggling, we're still kind of chopping around this area, but we're holding so far, holding that support. So until you break that support, I think this is a bullish area to be buying and going long gold. Looks good to me. And, you want to buy at support on major bull market trend lines. And that's where we're basically at right now. Let's look at some of these individual miners. I'm going to start off with Harmony Gold Mining HMY. This one looks like it's got a pretty good bullish setup. So I'm going to point out what I'm seeing. On the daily chart, you can see here, this was your correction back here. Big long correction. You can see that we basically were correcting for months on end. We finally broke out of that downtrend. So the downtrend line's right up there. We broke out right here. See the breakout? Gap up and run higher. That's an impulsive breakout. It came back in for a back test, held support, moved higher. And then recently, because of the Fed, basically, this is what the Fed wanted to do. They wanted to kind of quell the inflation trade a little bit so that it didn't get too overheated. That causes them problems. So they came out and tried to talk that down. They did not raise interest rates. They didn't do anything. They have taken no action. All they've done is talk. But traders take that and run with it. And so the miners have been selling off since the Fed last reported. Came down, and all we've really done, though, recently is come down and hit that trend line again. So far, we've held. This looks like good support. One thing I also want to point out is if you notice, not so much, we don't really have bullish divergence on the daily or anything like that. But on the hourly, when I flip down to the shorter time frame, you can see this move down, really down towards this area. We've started to put in bullish divergence. See the hourly, see how the momentum is starting to move up? If I zoom in, you can see right there, we're just making higher lows and higher highs. And here's the RSI, pretty much flat, but you made lower lows in price. So that's diverging. Momentum is building bullish divergence while price continues to kind of drift lower. But it's not that impulsive of a sell-off anymore. It's really just kind of drifting. It was drifting lower. So one thing to look at is we have this, we have bullish divergence and we're in a downtrend. You look for a breakout of that downtrend. And that's what I got. As of today, it looks like we have that breakout. So here's your downtrend on the hourly. And you can see today gapped up, sold off into the, sold off a little bit, but still holding that breakout. All right. So as far as I can tell, we started a reversal in this miner and likely going to start to move up. We got some resistance right here at 407. So I think we're likely going to run up to that 407, get a reaction, probably pull back right around there. But at least to move up to 407, I think is in the cards. Likely more, but I just want to point that out. Moving on to some other miners. Here's Agnico Eagle. The things I really want to point out, here's your downtrend line or your correction in what looked like, is a bull market. And we're making higher highs and higher lows. We're trending up in price. You can see you move up, you have a correction. Kind of like this. Strong move up, multi-month correction. Strong move up, multi-month correction. So you move up in waves in a longer-term bull market. And that's what I see this thing doing. And as I zoom in on the daily time frame, you can see here's your downtrend line. We had a breakout and we've come in for a back test. So this is support. This is where the buyers should be accumulating and buying. And then you look at we'll narrow it down to the hourly time frame to see what's going on really on the shorter time frame. And you can see clear bullish divergence. See how the price, let me get rid of this, kind of marking out some things here, but see how the price is just on this hourly chart been drifting lower, slightly new lows. But when you look at the momentum, you can see clear uptrend in momentum. And let's look at the RSI, clear uptrend in momentum. So bullish divergence on the hourly, that should set us up for at least a pop. Level of resistance right here at 62.83. We get through that. We've got a gap fill all the way up here. And I would say that would be a likely target up there at around 68.42. And a move from where we're at now, that'd be a move of about 12.5%. All right, so that's really it. And likely a lot more. Likely the next leg higher and reaching well above this 89 in gold. But it's not going to happen all at once. So I just want to point out kind of the near-term levels to look. Looks bullish to me, and as we continue to kind of drift lower with that bullish divergence, I think it's a matter of time before we have that breakout candle or reversal candle where we get a big move up. Some mixed signals on some of these miners, so it's not an all-in long, I would say, on these miners. It's just some have already sold off to where they look like they're at support, and some look like they could go lower. So it's kind of a mixed signal. Royal Gold, to me, has a potential bear flag forming. Doesn't mean it's going to play out, but I'd look for signs that it is. I don't think it's going to play out because of where gold bullion's at. I think gold bullion's at major support. Now, if gold bullion breaks that major support, then this bear flag likely would play out. Just point out the bear flag here. We've got a move down. We've got flagging action right here. And then you basically would project a continuation move like that. So that might set us up for a move all the way down to this area right in here. And that's where we would be back testing this downward trend line like some of those other miners have already done. So potential there for that to happen. This is a royalty streaming company, and they really held strength longer than the miners. So they might need to sell off as the miners, the direct miners, start to recover. Just something to look for. I'm not extremely bullish on this one right here. Got to wait for some signs that gold is actually done selling off. Something to point out though. And Barrick, we're looking at an hourly chart right here, but clear bullish divergence right there as well. RSI and PPO on the hourly as we continue to kind of drift lower. Each new low is a divergent low. So you look for signs of a breakout. And right now, we've got this clear downtrend line, right? Let me grab the right tool. We got this clear downtrend line right there. So we might need to kind of break up. I would say at least a move up to that trend line is probably in order. That would be a move of about 6-7%. I think that's probable at this point that we're actually going to bounce up into that trend line resistance. Just the way this looks and with that bullish divergence. Things to watch on that one. Anglo Gold, Ashanti AU, again, continues to hold support. So you can see on the daily chart, we've got some support down here. Several reactions. You can see we're getting reaction right in here. And we're holding that support. If you look at the hourly, clear bullish divergence on the hourly. So see the momentum, how it is bullish. It's drifting higher on the hourly. And even on the RSI, let me grab that tool. On the RSI, it's also drifting higher or bullish right there. And as price continues to make new lows, the momentum continues to move up, signaling that we're likely at least going to get a short-term reversal. If you look at the daily, I think we're likely going to hold. This looks like it was a bear trap, just a slight undercut. We've already recovered that support line. To me, looks like we're going to move up like that. So bullish on that one. At support, looks good in my analysis. Here's SLV. I haven't covered that that much lately. I don't trade silver as much. I prefer gold and gold mining. Occasionally, I'll jump on a silver trade. Silver has more of an industrial component. It's a little bit of a different play. I know a lot of the gold people try to talk it up as if it's the high beta play on gold, and it can be, but it also can be an industrial play. So things to look for. On this one, I've got a daily trend line, a bullish trend line, and we broke. Look at the breakdown. That's a sell signal, a big impulsive breakdown. And as far as I can tell, it's flagging out. So I think there's going to be a continuation move, something like that. I'd be more interested in buying silver right down in this area, which is right about 22.13, I think would be the buy target or buy zone for silver. And this is SLV, silver ETF. So I'm continuing to look for more selling actually in silver. I don't see all kinds of signs. Let's look at the hourly, see what we got going on. There is some bullish divergence showing up on the hourly. You can see that if I can grab the right chart. Sorry, sometimes my indicators don't have a lot of space to work within. bullish divergence there. So we're making slightly new lows. So maybe in the short term, things to look for, we might run up and gap fill. Bam, hit resistance and then move down. And this would be the buy zone. So I think in the short term, maybe there's a trade to the upside, but I'm not going to play it because it's right in the middle of this big range here. And I just don't, the risk is not worth the reward. What I mean by that is if let's say it wants to run up to that resistance, from where we're at now, that's a move of potentially 4.5% possible gain before you hit resistance. If it sells off, you've got a 8.5% possible loss. So a very unfavorable risk reward ratio. I have the potential to lose almost twice as much as I can potentially gain on that trade. So not interested. But if it were to move down into this major support, that's an area I'd be more interested with a stop slightly below. So I'd want to be a buyer down in this area, stop somewhere down in here, and then the risk reward would be very favorable because if you sell off and you stop out, you take a small loss. But if you're right and you bounce up to resistance, you've got a very good risk reward. Basically, buy it near support and maybe you have a 2 to 3% loss potential, but your gain potential is up to 14%. So risk reward ratio is much more in your favor. You want to be taking trades where the risk reward is in your favor. That's why I don't want to be that's why I wouldn't want to just be putting money, going back to the SPY. That's why I wouldn't want to just be plowing money into long trades up here. Your risk reward is not favorable. Yes, we are at all-time new highs. Yes, we can continue higher. We can continue to kind of grind higher. It's completely possible. But the downside risk of a sell-off is much more. I think we're likely going to find some sort of resistance reaction up in this area. And we could have some major support down here around 415. So basically your risk reward is what, 1%, maybe you give it up to 2% or so as a reward, and your potential risk could be, 3, 4, 5%. So very unfavorable risk reward in the short term. I think that it's just not worth taking the risk, even though there could be some gains, more gains to the upside. The risk doesn't seem favorable. Again, you want to go long stocks when nobody wants them. You want to go long down here. This is where you want to go long. You want to go, you don't have to go short, but you don't necessarily want to just be plowing money in long after you've had, a run up like this. I mean, from the lows to the highs, it's almost 100% from the March 2020 lows. That's not a very, favorable area to be going long, especially with negative divergence intact. So again, disagree or agree with the analysis, that's okay. But again, leave me a thumbs up if you guys find some value, and I will catch you guys on the next one. Bye.